Here are the slides. A couple of background slides. So when I do these talks, I think you guys have been browbeat with this stuff this week, but left-hand corner, just which is probably new information. We did some primary research and we asked consumers, if you had a real-time payment, who do you want to provide that? Do you want PayPal? Do you want Amazon? Do you want Apple? And I know most people won't be surprised by this, but they said they're regulated financial institution. The majority of people said we want our banks to do it. That's what they do for us. So we as an industry, and one thing I didn't tell you about my background, I did found a bank. I'm a founder of a community bank that went from 0 to 250 million in the US in 5 years. I still remain on the board of that bank. 260 million as of December 31st in less than 5 years. So I wear a bank hat. I also ran the e-commerce channel for RBS Citizens, and I consulted to them. So I've worked at a top 10 bank. I've worked at a startup community bank, and I really believe that we as an industry, we as financial professionals have let down the industry by not providing these solutions. I think we all agree, I've heard been sitting here, the technology exists, and it existed for a long time. There's nothing that is not in this room by every provider in the room to not make this happen. It's really about, I think someone said, you know, the schemes need to get their act together. And that's what we're going to talk about. And we think the regulated financial institutions should provide it. The consumers want it from that perspective. Someone asked me about Bitcoin. I'll just mention that real quick. So we, as a network, we have a converter. You can do any pair to any pair, meaning you can go euros to pounds, pounds to USD. It's just a converter. So you can go Bitcoin to dollars. We could do that today. But the network rules that we operate say you need to do KYC. So until, I believe it's a good thing, it's a great thing, but until we can present to the bank that Bitcoin follows the same rules that levels the playing field for everybody, we won't let them in the network. So just taking a step back, I think we're going to talk about 3 things just to give you guys a big picture for a second. Why everyone's up here and why the networks and why our friends at MasterCard, and they're a big customer of ours and we're a big customer of theirs. We're fighting over $1 billion worth of spending, and that's really what we're doing. There's $5 billion of real-time payments out there in the US, in the US-centric environment. 1 billion of it, 1.2 is consumer payments. That's what everyone's fighting over here in the room, is a piece of that 1.2 billion. NICE today, you know, we do about 200 million of that. So, you know, plenty of room for us to grow. We have less to lose than NICE, than MasterCard and Visa. Google and Apple can do some unusual things because the incumbents are Visa, MasterCard. But I just want to point out for a second, there's 2 other pies up here that I think people in this room should think about. And the whole regulatory scheme, everyone's been fighting over these consumer payments. And there's a lot of competitors and a lot of things. But these other 2 chunks are also real time. Being able to move money cross-border outside the US. Today, the laws really end at the boundaries of nations. And so when you move money cross-border, you have to do some other things. People probably know Dodd-Frank 1073, now part of Reg E, and handling those payments. 2.1 billion. Bigger margins, by the way, 40, 60% bigger margins than beating each other up over pennies. We're talking dollars in there. And then the holy grail, commercial payments. So we have, many of you know, on the first slide I had the Fed study up there. The Fed wants to understand how to speed up payments. People may say, well, the Fed has this thing called wires. Well, they think it's antiquated and broken. It's 40 years old. And people think that a wire is real time. I was sitting in this, the head of the Fed stood up, wires are not real time for anybody. Has anyone seen a wire room? They have faxes. The faxes come in, someone takes the fax, takes the piece of paper off the fax, or, oh, I'm sorry, some of it can be online. Then it goes to something that looks like online banking, and then someone in a room looks at a queue on a screen, and then takes that and goes to a terminal and types in your wire instructions. Is that real time? That's how it really works. I don't know, I mean, that's how wires really work. It's not real time, it's not straight through processing. So we have an enormous opportunity on straight through processing for corporate payments. Do I think $1 billion between sovereign nations should go over the network I'm creating? No, I don't. I think that's what wires are actually initially designed for, huge things. But do I think a small business moving $250,000 or you closing on a house for $500,000 or $1 million should be real time instead of getting a check so when you walk out, everyone's balanced? I think so. And these are the things, the problems that we're trying to solve. And we have a network to do it. And I'll be happy to send these slides out. So I see some folks, I talked to them earlier. I can share all these slides with you. So this page just basically says, these are some of the other real-time things that are going on in the US. We are not first. We are behind. That's what this slide says. They're doing it. Australia is ahead of us. They've already issued an RFP. They've chosen a provider. They have a lot of backing short. I don't know, how many banks, big banks are there in Australia?
Around 5 big banks and then there's 90 tier 2 banks.
So we're talking round numbers, 100 banks that have to agree. So we're going to put in, instead of they have bilaterals, when you see all those messy things going, we're just putting in a hub in the middle and creating a real-time infrastructure. So that's what they're doing in Australia. Same thing, what we're doing here. And so there's, so we're basically saying the ACH is the next generation, is ACH. So FIS, we have more than 1,500 mobile banking applications deployed at 1,500 institutions in the US. More than 20 million people walking around with FIS applications that are bank branded. So that's the mobile commerce side. I'm only going to talk about the real-time payments, that middle. We certainly, I'm happy to talk about the risk management and what we're doing to the network and how we're going to do it in the network. And then I believe with all of you guys, it is the active analytics, taking that analytics and either for loyalty and putting it on the network. But I'm just trying to stay focused because we don't have a lot of time. But I believe you need all of these things to make it work. I believe it's all about the customer experience. But consumers, when you ask them, they expect, just like Google, when I do a payment, I don't expect it to show up in my bank account 3 days later, right? It just doesn't make sense to me. When I use a credit card, does that come out of my bank account real time? No, it doesn't, right? They're really a big bill. My debit card, there's existing real time, when you use your debit card, you get money out of the ATM, does the money come out right away? Yeah, it's good, it's good funds, it's there, it's in your hand. That's the infrastructure, that's the model you should think about. We created a network that it acts just like the ATM network. When you hit the button, you've done all the credentials, we can talk about tokenization and all day long, and I can tell you how we're doing it and everything else. But the money is good funds. And it's also a network, it's not a technology. And I'll talk about what makes it a network in a little bit. So we built it on, we're going to talk about the middle piece, the network. We can talk about everything else that goes around it. I believe in customer experience. We're just going to hold off right now. The network has to be open. What does open mean? It has to work with these other schemes that are out there. It has to work with Visa, MasterCard. It has to work with the other banks. It has to be an open technology standard. These, many of you are payments guys, so I can throw around 8583, 22, ISO 20022. Well, we have to be flexible. And so what we did is we put an XML wrapper around an old technology standard called an 8583. Techies think that's cool. We're open. We can consume an ISO message, and that's why we're open and flexible. We can take any of these models, whether it's a payment from P2P real time, whether it's a payment from a mobile POS device, or whether it's from an MCX mobile wallet, or money sent from MasterCard. I don't care. I'm a network. I'm just trying to aggregate transactions. Sure. Is it competitive against other things we're doing at FIS? Yes. But from a network perspective, we're trying to get as much transactions. It's got to be real time. We'll talk about what real time really means in a few minutes. But in this instance, it's real time good funds. And I'll explain what that means. And global. We believe it's got to, today you got to go big or go home. And that's what the consumers want. And they demand, they want real time. They want it out of their bank accounts. They want to be able to use it across multiple models. Originators. So originators are people like PayPal and Google Wallet. So if you had to get money out of your PayPal account, or if you're an eBay merchant, how long does it take to get money out of your PayPal account into your regular bank account? Anyone know? How long?
3 to 5 days.
3 to 5 days. Well, so there's really no reason that it takes, there is a reason 3 to 5 days. There's no network that allows you to get the money real time into your bank account. And that's the problem we're solving. Allowing PayPal to move your funds from your PayPal account, which is a non-regulated bank account, into a regulated environment. We did the research and they said it should be the FI consumers would prefer. That's what banks were designed to do. They're secure, all the things they're paying, they're spending hundreds of millions of dollars and we're happily taking their money and making them more secure. But the financial institutions providing that, the person who was talking about their mobile banking for credit unions, I do think that the individual banks and individual credit unions will have their own wallet, as well as the, our research shows, someone asked the question, you'll have 5 to 7 wallets, cards in your wallet, just like you do today. So the physical paradigm will go into the virtual paradigm, which most people today have 5 to 7. A couple of quick things, when we ask consumers, what would they rather use mobile payments for? 80% would rather use it for international money transfer. Huge hole. Money from here to Mexico. Money from here to even Canada. Money from here to Mexico. India, China, Mexico, top 3 corridors. A to A, or P to P, account to account. That's the next. And then P to P next. This is another good slide. Oh, who wants to pay for these transactions? So we're a bank. So they're willing to pay for it if it's 94% of the people are willing to pay for it if it's an international transfer. So we're banks. We should use this. Yes?
What's your sample size and who did you talk to?
I will get you the study. I'm happy to do it.
It's very exciting. Because I would argue some of that stuff.
Okay, we've vetted it. I mean, we use a third-party primary research. I'm happy to get you the study. It's public. It's been quoted. We used a third-party ethos consulting. So 94% of the people who are interested in paying for international money transfer. 39% is willing to pay to ADA, and 60% P2P, and 34% expedited bill pay. So we look at it and we say, these should all be mobile enabled. We think international money is both, consumers are willing to pay for it, and they have the most interest in switching their financial institutions. So we provide technology to financial institutions, so it's probably a place where we should go. Or if you're a bank, it's something you can differentiate yourself because consumers are willing to switch to get this, this capability. We also talked about the majority would prefer it coming out of 55% would have it come out of their banking account to do real time versus one of the other providers. So I can get you all the data. I think the data is interesting, but I'm going to tell you quickly about the network, and that's really what so that was our backing for why we need a new network, and now I'm just going to basically walk through a little bit about what the network is and what it's able to do. So one of the big problems in card not present networks is validating an account. So how do you know the person is the person on the other end? Well, if we're connected into a core platform, where your bank is, where your money is, you have information that the bank knows about you on their CIS system, on their core system. Your address is there probably, your phone number, your amount you have in your bank account. They already tell the credit card companies and the debit card companies, is the account open to transact? That exists today in the network. So we can send a message to the core banks to say, is this a good account? Pretty valuable if you're a Google or your PayPal, you want to add a bank account directly to the wallet, or any of the wallet providers you have out there. Anyone who's a wallet provider, and you want to enroll and do proper KYC information, if you're directly connected to the financial institution, you can match that information. We can talk about how it's encrypted. We don't send the information down the same pipe. We mask it, we encrypt it, we do a lot of things. But these type of messages we've been sending are ISO messages that have been around for 40 years. The same ones that MasterCard uses, same ones that Visa uses, same ones that NICE uses, same one that Star uses and Pulse. And these are some of the transactions. Same thing, balance inquiry. So e-commerce providers, or when you're in a wallet, want to get my balance. Someone said SMS, they were using SMS banking. Well, it's the same concept. Just like you walk up to your ATM, you can see how much money is in there. We have a message that says, get balance. We can do real-time debits and real-time credits. And I mentioned outside the US, most of the real-time systems just like let a consumer authorize payments. The concept of a debit outside the US doesn't really exist. And so just something where we see things going just because we're following what they're doing in Australia and what they're doing in the UK is a consumer always authorizes a payment. And so then there's less, you don't give someone authorization to pull money out of the account. But we can do both, and we will do it under certain circumstances. So what is PayNet? It enables real-time access to accounts without using a card. We can talk about what the credentials are and how a mobile wallet can consume those. Ultimately, we're going against the routing and transit number of the bank. We tokenize it, we encrypt it. The banks can issue, the mobile wallet providers can issue different credentials, but ultimately, it is your bank account. It operates under a good funds model. I was going to tell you what that means. So when the consumer does a transaction, the money, just like you walk up to the ATM, the money is out. If the network says it's good, it's called good funds. But does the money, this is where people get all hung up on things and they want real-time payments. And what do real-time payments really mean? Since a lot of people are payments people in the room, we don't settle to the next day. Just like NICE and Star and Pulse and Visa and MasterCard and all the schemes in the US, they don't settle in real time. Just like ACH settles once a day, maybe they settle twice a day. Our network could settle as fast as the banks would allow. The reason why we don't settle faster is not because we're not capable from a technology perspective, but there's this operational problem. I remember I told you I founded a bank. We have 37 people there. If we were doing real-time payments and settling real-time, we would need someone there 24 hours a day because we know we're payments people and things fall on the floor. Things go wrong. And how do you service a little community bank service a 24/7 operation? Now, putting my FIS hat on, that'd be great. So we would stack up, we would have all these call centers in India supporting all these community banks. Good for us, but I don't think it's good for the industry. There's nothing wrong with a good funds model. What makes it a good funds model is the network rules say, if you do these things, you, the bank, have to move the money. And it's been working for more or less 40 years here in the US and around the world. So low cost of entry. It is an income generating thing for the financial institution, and it does have an interchange model. We do have some loyalty and retention data that we can put through the system, and it's really providing real-time, non-card-based, and a new global network. So on the left is the FIs. So you have to be a financial institution. We made it an FI-centric network. Or, much like the prepaid folks in the room, or you need to be sponsored into the network by a regulated financial institution. So opposed to Bitcoin, we tried to thread the needle of what the existing regulatory environment is, and we created a network based on the crazy rules we have in the US, which basically says you need to be an FI, you need to do these certain things, you need to do KYC, you need to do AML, you need to prove to us and the regulators that you're settling the books every night, or you need a bank to stand behind you, and that's what we have as a rigid rules. On the right-hand side, we have receivers. A receiver can be an FI, or it can be or someone else who's sponsored into the network. So PayPal could be on the left, PayPal could be on the right. the P2P application. MCX could be a network that's on the left and the banks are on the right. We can settle as fast as the banks will allow because we have a settlement system that is, again, technology. We've talked to the biggest banks in the country, in the world. Deutsche Bank, they don't want to settle, maybe they want to settle a couple times during the day, but they do, I guarantee you they do not want to settle real time. It's too much of a nightmare. So one thing that I was here to talk about the network that I think differentiates. There's a lot of technology providers in the room, and this is one of the secrets that I don't think people who are technologists really appreciate. And that's if you we talk about Visa and MasterCard and NICE and well, how it really operates. When the technology falls down, there's these rules that say how the thing operates. So we know as technologists, things go bump in the night. Settlement files don't happen. Well, we created a new set of rules. That's what the difference between a processor, which FIS is, versus a network. A network is a set of operating rules that tell the participants, if you want to participate in the network, this is what you have to do. If you don't, guess what? We can kick you out of the network, we can sanction you, this is how you have to use the brand. That's what makes things up. So I'm making this example up. But if the network couldn't handle, couldn't stop over $1 million payments, the network rule could say, you cannot send a transaction more than $1 million. So technologically you could, and we would catch it, and maybe someone would try to do it once, twice, 3 times. But the network rules would say, an analyst would come to me and say, look, we're getting all these multi-million-dollar transactions from someone, send them a nasty letter. That's what Visa, MasterCard, NICE, that's what we do. So it's a living, breathing network. It's a scheme. People call it a scheme, a network. What makes it so is not the technology. This real-time technology has been around, as a lot of people have been saying, for a long time. It's really about the network operating rules, which is part of the special sauce that really separates this. Shifting the liability, we talked about, I heard that earlier, from the issuers who are getting killed to the folks who are originating transactions. Those originators could be a regulated financial institution or someone sponsored in. So just like today, if you use your debit card in Amazon or PayPal, Amazon and PayPal are responsible for those transactions. And they come real time out of your bank account. It's exactly, and those are card not present rates, low, inexpensive for the merchant. The issuer is not on the hook for those transactions. In this network, the same thing happens. We shift the liability to those who originate the transactions. So what makes us be able to do this? We have pretty broad reach. I mentioned we're a $6 billion company. We have 14,000 financial institutions that we work with around the world. Here are some of the, here's our strategy to expand this. So anchor banks, we are working with the top 4 banks. We expect to announce probably one of those top 4 in the next couple of quarters. FIS today, we have 1,800 cores that are connected to the network. That gives us about 10% of the DDA coverage. We do the entire core processing for these institutions. I mentioned before, FIS also owns a network called NICE. So we have 3,000 participants, 2,400 FIs that are connected to the network. And then other networks want to play. I mentioned before we want to be open. So someone like Co-op, people may not know who Co-op is, but they have 3,000 credit unions. They're in California. So they have 50 million DDAs associated with the credit union. So you can quickly see if you get one FI, FIS's banks, NICE banks, and Co-op, we're probably over 20–40% of the market. If you say, well, okay, that's good, but where does the other 60% come from? Two answers. One, I said we're open, and we don't want to own the world. We like to, but it's not reality. But someone else is going to fill that gap, whether it's Visa, MasterCard, Bank of America themselves, other networks that evolve, will interoperate with them. We're talking to the clear exchanges, the other networks that are evolving, and we will interoperate with them and have reciprocal agreements. Just like today, nobody looks on the back of your debit card. When you walk up to an ATM, Does anyone look at the back of your debit card to see if it works? You just assume it works. Why does it work? Because we, the networks, have interoperating agreements with Star and Pulse and NICE and Shazam and AFIN and Excel Exchange and networks you probably don't even know you have. Co-op and CU24. There's, in the US, and then globally too. China Union Pay and other networks that we all interoperate with and have reciprocals with. And then the second wave are really, the reason why they're second wave to us is they're non-FIS. We don't touch them today. These would be our competitors who have, so like KeyBank uses Hogan, which is a CSC core platform for those real technology people, or US Bank uses Hogan, which isn't our technology. So that's the only reason why they're second is because everything above here, these are the people that we work with today, and we have technology in there, they're our customers, and so the second wave is just people who aren't our primary customers or don't use our technology, but there's no reason why we can't connect, just as today where EFT traffic goes to different flows. So here's a summary, and then let's open up to questions. So it's a new global money movement platform developed by FIS. We do real-time account access without requiring card information, facilitates both debits and credits, operates under a good funds model. Originators pay access fees, similar debit card business model, and we have global coverage. So with that, let me open up to 2 questions. How much time do I have? 5 minutes. 5 minutes. Yes, sir.
So Peter, when you say open, open means a lot to different people, right? So
yes.
Does that, I'm assuming, and correct me if I'm wrong, or give me your viewpoint on it, it's open for anybody to be an originator, meaning FI on the originator side, and on the receiver, anybody can code to an API to this network? Is that what you're saying?
Yeah, so open, and open it means a lot. Open as long as you follow the rules. And so there is some rules, like you have to get an FI to be a sponsor. You need to pay some money.
On both sides or just one?
Both sides. If you're going to be a receiver, well, really banks can only be receivers if you think about it. The banks will always receive the funds. A regulated bank account will always be a receiver. But on the origination side, you could hold it in a wallet, like a prepaid account, would really be both a...
But it's still a BIN, not a hold, right?
Correct. So they would be sponsored in just
but
like
in other words, like the mobile wallet, the virtualization of a non-bank entity would not be a candidate on that receiver side?
They would need to store it in a stored value account. So, no, there could be a originating receiver. Yes, PayPal. Yes. But they're really what we're doing in the PayPal example is they want to get, they wouldn't really use it for that. They're using it for getting cash out of their world because they don't have a problem moving it. It's real time from PayPal account to PayPal account and eBay to PayPal, right? But it's not real time from your PayPal account to your regulated bank account. So that's we could do what you're saying, but that's the area that we're playing today in the real life.
I think it's really interesting that kind of PayNet is kind of following what the Fed is looking at right now with the measure that they just released last year. I think they're taking public comment on it right now. Do you think, well, obviously you're already doing it, but do you think a system like this is going, because it seems like you're doing kind of what they're looking to possibly do. Do you think the private sector can handle it, or will it be something do you think the public sector can handle it, or will the private sector, I'm going to confuse my head. Do you think it's going to turn into ACH, basically? Do you think that you're going to create a government rail to facilitate it, and then it will work, and people will trust it, financial institutions will trust it more?
So the question is, do I think the government will create this real-time system, or will it be by private entity? So one thing that people don't really appreciate, so the ACH is, so the Fed is an operator, but there's other operators too. So the clearinghouse is, FIS has endpoint exchange, so we do clearing amongst ourselves. I can't think of what the Wells Fargo, there's another clearing between the big banks and stuff like that. So I think there'll be some hybrid, that's why I said the 40%. I would love the Fed, and you can absolutely, I spoke at the Fed conference when they kicked that off in Chicago. You can read my response, which is 150 pages. It's everyone, I don't know if people know, so the Fed wants to do real-time payments. We totally support them doing that. And they want to, they publicly said they want to do private-public partnership. They actually went in the process for 3,500 banks, and there's 14,000 institutions in the U.S. within credit unions and everything. So there's plenty of other room. If they did the 3,500 and got technology from us, I'd be happy with that. That's why I'm not looking to take over the world. You know, it'd be nice, but we would interoperate with something like that. We've talked to them about doing a pilot. For those who don't know, it was in so October-ish, they put out this paper. It was due, it ruined my Thanksgiving and Christmas writing this response. And there's 161 responses out there. If you want to really understand the payment ecosystem in the US, there's some phenomenal data. Most of the large banks responded, some international, China UnionPay, some large external providers, Walmart, and it really is, I'm surprised, in fact, there hasn't been some more press or analysts, but it kind of came over the holidays, and I think they're just...
I'm surprised we haven't had more discussion about it here this week, since we've been here.
Yeah. So we support what they're doing, so I'll answer it this way. We support what they're doing. I think there's absolutely a need for this network, and we would like to partner with them, and if they do their own thing as they do for their 3,500, we still do processing for 2,500, and we're happy to do it just for them. And that's how we align to do that. They're interested. That was a good question. Anything else? Yes?
Peter, can you talk a little bit about the account access fees? How is that going to compare relatively to interchange, debit networks?
It's a really good question. So I didn't put the fees up there, not because they're not public, but I just knew it just gets into a whole other discussion. Really good question. So how do the fees work? So first of all, the originator pays, and the receiver, the financial institution, gets money. We designed, and that's why I also put up the consumer payments, commercial payments, and international cross-border, because they will be, as you know, Visa, MasterCard, they have, and NICE, we have 30, 40 different price schedules, right? Supermarkets get one price, card not present. So we try to simplify it. I think it will evolve. Right now we align to Durbin to be totally, so our debit is 24.5 cents. Don't quote me on these exactly, but 24.5 cents to be debit. If it goes down to 12.5 cents for Durbin, we'll match it. Remember, every transaction that I make it on the switch fee. So me, FIS, I'm not losing money. If it was $1 or if it was 12 cents, I still make 2.5, 3.5 cents, 4 cents. I can make a lot of money at 4 cents a pop.
Brad, I guess my question was, though, for the receiving financial institutions, if it's going to cannibalize their debit income, why would they agree to participate?
Yeah, because it's coming. So this is, you can, there's a lot of, so there's people in large financial institutions or large card companies that want to build the walls higher, and there's some who see things are breaking the mold. And so I'll just throw an example out. If you want MCX traffic, hypothetically, how else are you going to get MCX traffic? You can't go to, MCX isn't you're not a company. You have to go through maybe a bank or maybe a network like PayNet, as an example. So even if they're, so it'd just be another network, I guess, and it will cannibalize. I'm not suggesting it won't. We did some modeling, and we think they'll be smaller than you think. Things will still go ACH. I'm not suggesting it will go away. We think it'll be about 8% cannibalization, which, you know, most, except for the top 4 or 5 banks, they don't care. The little credit, the little bank that I serve on the board of, we don't care. We'd make the same money. It's not cannibalization. If you're Citi, you have some concern. If you're US Bank, you have some concern. But I would tell you in both those banks in particular, there's also people who are innovators and recognize, well, it's going to happen either with us or with others, right? Did that answer your question?
Yes, thank you.
I got to wrap up. Any last questions? Okay, great. I really appreciate it. I'm around. I'll stick around if you guys want to ask questions. Thank you.